Thank you, Eric. Oil prices are down 30% this year. The stock market is near all-time highs, and yet China and Europe continue to show slow economies. Will the slowdown impact U.S. earnings? Mohammed El Arian is with us. He's the chief economic advisor at the global investment firm Allianz and the former CEO of PIMCO. Mohammed, good to see you. Thanks for joining us.
Thank you, Maria. Good morning.
So it's a big week next week, even though it is a holiday-shortened week this upcoming week. You've got the GDP report out on Tuesday, consumer confidence out, got an OPEC meeting happening in Vienna, and then, of course, there's Black Friday, the kickoff to the holiday shopping season. How would you characterize the U.S. economy and the rest of the world right now?
So we're doing better than the rest of the world. We're growing, we're healing. The problem is that we're facing headwinds from the rest of the world. And what we've seen recently is that things have gotten so bad over there that central banks are being forced to do even more. And this growing divergence in growth, this growing divergence in monetary policy around the world is causing quite a bit of issues for us. So we're doing great. We're doing better, I would say, but the problem is the rest of the world is not doing as well as we are.
And of course, just this past week, China cut interest rates. Japan is creating more stimulus there with low rates there as well. And Europe, we're expecting some kind of action from the European Central Bank in December.
We are. And the central bank will probably do more there. The result of all this is two things. One is that the dollar is getting stronger, and the other is that markets are getting artificially boosted by central bank liquidity and need to be validated by economic fundamentals. And that's a really critical issue going forward, Maria.
So in terms of allocating capital, I mean, from an investment standpoint, Mohammed, we all know that Bill Gross famously left PIMCO this year. What is the new normal at PIMCO right now? Are they going to start pivoting more toward equities, given the fact that we're seeing all this central bank action?
So there's tremendous talent at PIMCO, and that talent can be reflected in many different asset classes. In general, we're going into a world, Maria, where asset managers are going to have to offer more than products. They're going to have to offer solutions to their clients. Why? Because correlations are changing. You mentioned oil. Look at commodities. Commodities have been coming down while equities have been going up. That is a very strange correlation historically, and it reflects the interference of central banks with the functioning of markets.
So what would be your instinct then? Do you want to buy equities right now, or are things getting overheated?
I would say, given the very strong rally we've had, take some money off the table here, have some optionality. There will be bumps down the road. There will be lots of volatility. You want to have dry powder at this point. So take some money off the table, be ready for greater volatility, and at that point, look to pick up good companies at cheaper prices.
After you see a sell-off, what are the implications of this strong dollar, Mohammed? I think we're at a 7-year high. If you look at the dollar versus the Japanese yen versus the euro, very strong currency here.
Yeah, we're at 7 years high because, one, our economy is better than the rest of the world. And secondly, we are tightening monetary policy while the rest of the world is loosening monetary policy. And these two things together mean a stronger dollar. In theory, this helps the rebalancing of the global economy. In reality, two things. One is our exports will do less well. And secondly, there's a risk that the volatility of the foreign exchange market gets translated to other markets. So it's not great news, but it's understandable given economic and policy divergence. And divergence is a key word looking at 2015.
What's your take on the decline in the price of oil? Is that going to help consumer spending going into the holidays?
Oh, undoubtedly it's going to help consumer spending. And as you heard from the CEO of Macy, it will help in particular the lowest income segments of the population. And that lower oil price reflects two things. One is better supply conditions, but also lower demand because of the slowing global economy. But for the consumer, it's a net positive.
Real quick on Russia, Mohammed, I guess they're seeing money flow out of Russia at a rapid clip, $130 billion in capital expected to come out this year alone. What's your take on how it plays out in Russia, which, of course, is expected to be in recession times till the end of the decade?
So it's a mess because the economy is being impacted by sanctions, by lower oil prices because they're a major energy producer. Because of that, the currency has fallen a lot. Because of that, capital is fleeing. So Russia is looking at a recession and the risk of inflation and the risk of financial instability. You know, what President Putin has done is basically traded off his adventure in Ukraine for domestic economic and financial instability. And the question is, will he continue with that trade-off, or will he try and get things better and stop his interference in Ukraine? And that's the equation that everybody's looking at.
All right, Mohammed, good to have you on the show today. Thanks so much.
Thank you, Maria.
We'll see you soon. Mohammed El Arian.